Well, Q3 was obviously a very exciting quarter for Cushman Wakefield, given the merger completed between Legacy DTZ and Legacy Cushman Wakefield. In terms of volumes for the quarter, there was £1.1 billion of shopping centre transactions. For the year to date, that was £3.1 billion. That is down on last year's Q3, but it's actually about trending the 10-year average. It could have been a much bigger quarter when there's £650 million of transactions under offer, and a couple of those have actually happened since the quarter end. You can see from the graph that we're putting up now where volumes are for 2015. We do think that by the end of the year it will replicate the 10-year average, if not a little bit ahead. I don't think it'll meet the deals done of last year, which was a bit of a record year through the cycle. Another bit of excitement in the quarter was the opening of Birmingham Grand Central. John Lewis on the first Saturday had 100,000 customers in the store, which is fairly phenomenal. Moving into transactions, I believe there was a couple of very keen transactions in London this quarter.
The two deals to which Barry refers are the purchase of the West 1 shopping centre above Bond Street Tube Station by Norges for a yield of sub 3.5%, and also the sale of Angel Central, which was a shopping centre we sold for TH Real Estate for a yield of close to 4% to CBRE Global Investors. In the regions, we also concluded two key deals: the sale of Blackpool Hounds Hill for Blackstone for £100 million, a yield of 6.2%, and the purchase of Eastgate and Inverness for Harbert for £116 million, a yield of 6.5%. Over the quarter, super prime yields have improved further off the back of those London deals and also the competitive bidding we saw on the Grand Central shopping centre. However, outside super prime, it's a more stable picture. Buyers are being more discerning and price conscious in their appraisals. We do, however, anticipate a strong 2016 and an improving market, particularly at occupational level, and that will improve investor demand and drive values once again.